Hi everybody, this is AJ speaking. This is part 9 of my Tesla 4Q 2024 financial review. In part 8 we finished with operating profit, and so I'm just repeating this slide here. We'll be talking about non-operating items in this part, and I just want you to focus on this. So the key items to go from operating profit to profit before tax comprise interest income, interest expenses, and other expenses or income. And I wanted to show you the end result first. So when you look at the operating income, it was 1.6 billion, but the profit before tax was almost 2.8 billion. So the net result of these three non-operating items had a material impact, and this is what we're going to talk about in this series. So this was the main driver, other income and expenses, and we saw a quite substantial increase in this line item, and actually it's an all-time high. So the line item was 837 million in that quarter, and that compares to negative 270 million in the third quarter. So what were the key drivers? The by far biggest driver was Tesla's revaluation of its Bitcoin holding. Tesla owns 11,500 Bitcoins, and there was last year a change to how companies can account for digital currencies, and Tesla, as they pre-announced, would make this accounting change in the fourth quarter. And Tesla realized, because of that accounting change, 589 million in one-time Bitcoin gain. What's important to note is that this is a non-cash item, so it only shows up in the P&L, and then when you go into the cash flow statement, this is being backed out again. However, when you look at the 837 million, you notice, there's actually a meaningful amount of some other income that hit Tesla's P&L in 4Q, and even though people would jump to the conclusion this was an FX gain, there was probably some FX gain, but if you look at the currency developments, etc., and the fact that Tesla is not hedging currencies as they disclosed, this one-time benefit was likely driven by something else. However, this is not disclosed. But long story short, there were two material one-time positive effects that drove the significant performance of profit before tax over operating profit. And then when you look at sort of the full year performance as a result, Tesla recognized almost 700 million in earnings from non-operating items, and this compares to just 170 million in 2023 and negative 43 million in 2022. Then in terms of relative performance, the way to look at this item is not just the total amount delivered, 837 million, but also what it meant in terms of quarter-on-quarter change. So in 3Q, this was a headwind of 270 million, then a tailwind of 837 million. So the swing from one quarter to the next quarter was actually 1.1 billion. So that's why I call this kind of the earnings story of the fourth quarter. It was really driven by non-operating items. Since the drop in operating profit was partially anticipated, and the net effect of the overestimation operating profit and underestimation of non-operating items actually drove an EPS delivery that was broadly in line with market expectation. However, in general, you don't want an EPS to be roughly in line with consensus. It was a slight miss on non-operating items, because non-operating items are typically considered as non-recurring. And for example, this Bitcoin gain depends on whether Bitcoin continues to rise. For example, it also goes the other way. If, for example, in 1Q, if Bitcoin should decline for whatever reason, Tesla would now have to reflect, after this accounting change, the change in Bitcoin value. So Tesla would recognize a Bitcoin holding loss which obviously would also be a non-cash. And so this accounting change that Tesla implemented in 4Q, just like many other companies, creates additional income statement volatility for Tesla from now on. So, and then the other two items in non-operating, interest income, interest expense, when we quickly look at them, so Tesla's interest expense slightly increased here, 4 million, so not a needle mover at all. This was driven by Tesla further increasing its debt by a small amount at 8 billion average interest being liability balance. It's still very small for given Tesla's size. The average yield on this kind of debt Tesla pays was 4.8. That remained constant quarter on quarter. But then more interestingly, the interest income increased slightly quarter on quarter, and therefore the net interest income and interest expense is kind of neutral, because one increased slightly, the other two, so they set each other off, broadly speaking. And the interest income is quite interesting in Tesla's case, because Tesla has such a huge cash pile. It's now at 35.1 billion, and again, this is average interest bearing assets, but it's not the end of quarter balance we look at later. And you can see that the yield Tesla generates on these assets is actually quite high. The implied yield in the fourth quarter was 5.0%, but that's pretty good. That shows that Tesla's finance team knows what it's doing. Otherwise, this asset yield would be not as high, given where market rates are at the moment. The other interesting consideration when it comes to Tesla's interest income is that Tesla trades at a very high implied PE multiple. So this creates the paradox situation that doing any kind of capital return to shareholders, anything, even if Tesla could, given the large cash pile, they could easily do 3 billion share buyback. I don't think that would move the needle. It would probably pop the share for 1 or 2 days and then it would quickly go away. So I think it makes more sense to basically accumulate more cash, because of the very high PE ratio. This interest income, even though this should be considered as an extremely boring type of income, and actually very, from a finance perspective, very costly type of income, because capital is not free in the capital markets. There's something called the cost of equity, and at 5%, Tesla is clearly not earning the cost of equity on this capital. But long story short, in Tesla's case, because of the high multiple, this makes actually complete financial sense from a financial engineering point of view, and that's why I expect Tesla to keep growing this cash pile for quite a few more quarters. And just for example, when you look at this number, it's 442 million, and then when you go back to profit before taxes, so Tesla, excluding these one-time gains, was, let's call it 2 billion. So the interest income contributed over 20% of Tesla's bottom line earnings. But that's obviously quite significant. And this number is over 50% of Tesla's global automotive credit sales. So that's why I think people are not talking enough about Tesla's interest income. This then gets us to taxes. You can see taxes came down, even though when you look at the profit before tax, it remained quite constant, but the Bitcoin gain should be removed. It's as I understand, a non-taxable item for a lot of good reasons until it's realized. So for that reason, when we go here to the tax provision again, because the operating income came down quite a bit, the other non-Bitcoin related non-operating items were kind of a wash. I'm talking interest income, interest expenses. The bottom line, the taxable income came down quite a bit, and for that reason, the tax provision came down quite a bit. And what this meant in effective tax rate, you see on this chart. So on this chart, I excluded the Bitcoin gain, and this gives you a much clearer picture. You can see that this caused the drop in taxes, because the profit before tax was overstated by the by a bit of Bitcoin gain. You need to remove the Bitcoin gain, then you have the relevant tax base, and then when you calculate the implied effective tax rate, you get to this 19.9%, and you can see this is in line with broadly in line with prior quarters. Ignore the first quarter of 2024. There were some, let's call it one-time tax events. Here 4Q 2023, I'm not showing this quarter. The tax charge was actually a positive tax release of 5.8 billion almost, and this was, I talked about this earlier, there was a tax change, and this led to a non-cash release of certain tax reserves, and you can see from that point onwards, Tesla's effective tax rate increased quite a bit. Again, ignore 1Q 2024. So going forward, the tax rate that you should expect for Tesla, excluding non-taxable items, is around 20%, and this lines up with the effective tax rate that you see in other large multinational S&P 500 companies. So this gets us now to the end of part 9. In part 10, we'll be talking about the various details around Tesla's net income and adjusted net income. See you in the next one. Bye.